We don't have stable prices. And somehow this gentleman thinks that he could prevaricate and obfuscate to the American public and tell them how they're protecting the value of the dollar. No, you're not. You're not protecting the value of anything but the value of banks' assets on their balance sheet. That's what you're protecting, Jerome. And you're not fooling me. The only thing you care about is keeping asset prices inflating so they don't erode in value, so banks' balance sheets appear to be solvent.
In today's news recap, gold slightly up after hitting record high overnight. Gold prices are up a bit in midday U.S. trading Thursday after overnight hitting another record high. Silver futures are modestly down. The precious metals bulls got through some central bank decisions this week, relatively unscathed, which gives them fresh confidence. April gold was last up $5 at $3,466. May silver prices were last down 21 cents at $33.99. The marketplace has digested the FOMC meeting that ended Wednesday afternoon with no change in U.S. interest rates. However, the Fed did slow down its runoff of its securities holdings, which is a slightly dovish lean. Barron's reported Fed Chair Jay Powell did a superb job of threading the needle. He said the U.S. economy is still solid, but added inflation is creeping up a bit, and there are heightened economic uncertainties. At present, the U.S. stock indexes saw their biggest FOMC day gains since the middle of last year. And Powell also managed to not draw the ire of President Trump, at least not yet. Also, the Bank of England and Sweden's Riksbank left their monetary policies unchanged today as expected. The key outside markets today see the U.S. dollar index higher. NYMEX crude oil futures prices are higher and trading around $68.25 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently around 4.2%. Technically, April gold futures bulls have the strong overall near-term technical advantage. Bulls' next upside price objective is to produce a close above solid resistance at $3,100. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $2,900. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Listen, if everybody stopped looking for work because they gave up because they couldn't find it, the unemployment rate would be zero. That's the way they calculate it. So, but supposedly we're being told that we're not in a recession and the unemployment rate is historically low. But why do we have $2 trillion in deficits? Why do we have $36 trillion, almost $37 trillion in debt? I'm not talking about unfunded liabilities. I'm talking about just debt outstanding, 123% plus of GDP. When you have those kind of numbers, the central bank really isn't looking out for you. They're trying to keep the federal government solvent. And that's why that's why we have inflation. The government's an extremely horrible distributor of capital. They create imbalances in the economy. That's what they do. I mean, the government doesn't have any money. The government has nothing. They steal the money from you, or they borrow money that is printed by the Federal Reserve and private banks. That's how the system works. And that's why we have now an intractable problem with debt and thus an intractable problem with inflation. And the only benefit we're going to have from we might see a recession which brings interest rates down temporarily. But God help us, Dunnigan, on the other side of the next recession, when the deficit is going to rise close to $6 trillion. That's an annual budget deficit. That's my estimate based on prior recessions and the effect on the annual deficit. Could you imagine that? $6 trillion? So coming out of, I'm going to talk about the Fed put for a second. So everybody's now saying, well, the Fed has your back. The Fed is put is in full force, blah, blah. Let's talk about the Fed put for a second, if you don't mind. The Fed put, I'm pretty sure we had a central bank, a fully functional central bank in the year 2000, right? The Federal Reserve took interest rates from 6.5% in 2001 down to 1% by 2002. Did that stop the NASDAQ from going down 80%? No. Did it stop the S&P from falling 50%? No, it didn't. So let's fast forward to 2008. The Fed started cutting rates from 5.25% in December of 2007. Took them down to 0%. 0%. Did that stop the S&P 500 from losing 57% of its value? No. Did it stop home prices from dropping 33% nationally? No, it did not. So what Fed put are they talking about? The Fed always acts based on lagging economic data that's reported a month behind. So you have inflation that was created post-COVID that led to record high inflation in this country. And the Fed is saying, we kind of have an inflation problem, but if they were actually forward thinking, now I don't want them to do this. Listen, I prefer that the Eccles building close its doors. I'm just saying if they actually had models that work, they would be ahead of these bust cycles, these disinflationary and deflationary cycles, but they are not. And it's the same thing is going to happen again. The Fed will be acting to pump up asset prices after the market's down 20%, but it'll be too late because monetary policy works with a lag. And like I said, now the next time the Fed takes interest rates to zero, and they will, the next time they undertake QE, and they will, the next time the Treasury and the Fed get together and send out, legions of helicopters to bring checks to people, helicopter money, and they will, I have no doubt. Where do you think inflation is going to end up then? Because who is going to believe them that they actually have any plan or ability to control inflation? When you actually try to fight inflation, the economy melts down because we financialized the whole system. Asset prices have become such a huge part, asset bubbles have become such a huge part of the economy and the economic growth function that once they collapse, the entire economy falters.
In today's news recap, silver price remains below $34 after Fed rate decision. Silver price holds on to gains after a previous session of losses, trading around $33.80 per troy ounce during Asian hours on Thursday. However, the non-interest-bearing metal faces pressure following the Federal Reserve's interest rate decision. As widely expected, the Fed maintained the federal funds rate at 4.25% to 4.5% during its March meeting, but reaffirmed its outlook for 2 rate cuts later this year. This stance aligns with forecasts of slower GDP growth and higher unemployment, counterbalancing concerns over rising inflation in the United States, potentially driven by aggressive tariffs imposed by President Donald Trump. Silver, a non-yielding asset, may have found support as U.S. Treasury yields declined, with the 2-year yield at 3.97% and the 10-year yield at 4.24%. Meanwhile, bonds gained traction following the Fed's decision to slow the pace of quantitative tightening, citing concerns over reduced liquidity and potential risks tied to government debt limits. Silver lease rates have surged due to shrinking stockpiles, particularly in London, as silver flows toward the U.S. to capitalize on higher prices. Banks and traders lease silver to ensure short-term liquidity for trading or operational needs. This shift has widened price gaps between major markets, with spot silver up 17% this year, outperforming other commodities. Additionally, physical silver transfers from Canada and Mexico are strained by tariffs, further tightening supply. Growing fears of a silver squeeze could disrupt trade for months. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
He signed the continuing resolution, which keeps spending at the same level it was last year. So where are the cuts? You know, the February deficit was 2 times revenue. An incredible phenomenon. So it's 200% of revenue in 1 month. And that's the spending you want to keep in place? It's just mind-boggling. Oh, can I just, before I forget, I hope I don't forget, but so I won't forget. In case I do forget, which I probably would, I have to mention this. So we had a little bit of a comedy show when the Federal Open Market Committee had their March meeting yesterday, right? So Jerome Powell has this projections of when he's going to get to this number and when he's going to get to that number. So he projects he's going to achieve his inflation target sometime in 2027. And that would mean that the Fed would be north of 2%, above its 2% target for 6 years. And then, and using the cookbooks. And then I said to myself, wait a second. So he says, everything we do is in the responsibility and the pursuit of happiness and the joy of the middle class and blah, blah, blah. That's what he always says. You know, that was my paraphrase. All we do, every function, every thought process is to how we benefit the middle class of the United States and the poor and to keep prices stable, blah, blah, blah. And then he says he's not going to reach his inflation target for 6 years. And here's the punchline in the joke. And he's in a rate cutting cycle. So wait a second. I mean, why is it that, you know, I'm not invited to any of those meetings, Dunnigan, as you know.
Heck, you're not even invited on the mainstream media anymore, Michael. You might as well give up on being invited to the Fed Open Market Committee.
No, really not. I mean, Newsmax and maybe occasionally on Fox News, but not really. But so the next question from the next reporter is like, Mr. Powell, you said you're not going to reach your target for 6 years, your inflation target for 6 years. Why are you in a rate cutting cycle? That would be the only question that he should ever have been asked. But no one even paid attention to that. Sorry, that's my rant. I hear some of the talking heads on CNBS, et al. And they say, well, you know, inflation is not a problem because real incomes are positive. And I thought, wait a second. So incomes are rising faster than inflation, according to many talking heads and many associated with big banks on Wall Street and Federal Reserve officials. And then you brought up a great point, and I've written about this. So, okay, maybe some people's salaries on a median basis are keeping up with inflation. But what about the 7 point whatever million people who are retired in this country? Are their incomes keeping up with inflation? And what about all those people who are underemployed? We're working for minimum wage. The millions upon millions of people who are not keeping up with inflation. Like you said, people are having to sell their homes because home affordability is at a record low level. And that's all laid at the feet at Mr. Powell. Everything we do is in the service of the middle class of Americans. No, that is a lie. And I think he knows better. And we all know better now. If you thought before you listened to this podcast that was the case, how is it then that home affordability is at a record low? How is it that real incomes for most Americans are plunging and have plunged? It's because the destruction of the purchasing power of the currency has gone in overdrive. It started really in 2000. You can even go back to 1987, but it went into overdrive, global financial crisis, post the global financial crisis, and then ex-COVID, post-COVID. And it doesn't look like it's slowing down because we have central bankers who still maintain that they've done a great job with bringing the second derivative of inflation down from the way they measure it, 9 to 3. But in reality, it's gone from 20 to 8, and it's still eviscerating the middle class.
What do you think of Michael Pento's take? Do you agree that a major recession is looming and that precious metals are the best protection? Let me know your thoughts in the comments below. Hit like, subscribe. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.